I do have a question for Michael, if I may. So regarding the concept of event horizon, and I would like to know if, and forgive me if this has been answered before, I haven't seen it. Um, with that concept, am I able to apply that between different PD arrays? So let's say in the past, and it has worked, but I want to know if this is something that maybe you would consider do or already doing, with the concept of, let's say, a first presented and then a new week opening gap, and then from maybe the high of one to the low of the other, uh, and maybe even grading them to see how price uh, reacts within those levels. Is that something that would be a constituent of your concepts?
You're delving into Enigma.
Uh, I see.
It's
Because
a
that
lot
is,
of that kind of stuff. And once you know the PDF, I think today I demonstrated again live. I know which ones I'm looking for, and I know which ones the algorithm's going to refer back to, unless manually intervened. Once you get to that skill set and level where you can see the ones that are the right ones to be utilizing in the current market conditions and market structure and the session you're trading in, if you start dividing the difference between that PD area you're entering and the next one, many times if it's short, if you trade down and you see an expansion to the downside, if it trades back up the event horizon, I'll add and pyramid at that level. You don't see it on my charts. Sometimes people are like, why did you build in pyramided entries there? There's no PD right there. It is. It's the event horizon.
mhm. Yeah, that's a very powerful concept. I got the privilege of learning, and it's something that I try to utilize a lot, to great success, I will say. And the first presented concept is extremely powerful. Actually, I had just seen your video the other week about the New York lunch algorithmic theory, and you had mentioned, and please correct me if I'm wrong for my interpretation, but essentially you're looking in that model for a liquidity target aligning with the time of the end of New York lunch and the beginning of opening range, utilizing the first presented in that New York opening range. And I believe you also had notated the last inefficiency created right before opening range. And you were saying that the algorithm essentially, reacts to these, I guess, levels, we could say. Uh, I want to know if there's anything maybe I missed there, but I have been back testing this, and it's been it makes me want to trade New York lunch. I'm not gonna lie, which is something I hadn't done too much of in the past.
Do you find it's difficult to argue against the idea that these markets are driven autonomously?
Oh no, I wholeheartedly know and understand through your concepts that they are, and they're delivered autonomously. Now, I guess you have mentioned manual intervention, and I'm guessing that would essentially be some sort of manipulation, right?
Yes.
Of sorts. Okay.
They'll override the present script that the price is under. And
Mhm.
they have a lot of camouflage. They have a lot of people out there that they're indoctrinated. They drank the Kool-Aid that it's buying and selling pressure. They can see because of what people bought and sold the last time. Listen, for the folks that are trying to kind of like force this idea as this is the reality of price. This is the real order flow. You can see what these people bought and here's their orders. This is where, yeah, that's fine. We're also seeing the same thing in the candlesticks too. You can see it where the candlestick open and where the candlestick closes and where the highest high and the lowest low. People traded those prices. And if
Right.
we can divide those ranges and lay a schematic of whether it's a premium or discount relative to that range you're defining, whatever that range may be, if you're bearish, if it stays in the discount side constantly and that's creating a level of resistance that it can't overcome, that means order flow is bearish. And if we split that down into more specifics like octants, grading specific ranges and levels, you bring in and usher in a level of precision that's alien to anything else out there. And it's like that's the biggest thing, the biggest compliment that you can give and this is the one that I accept and I look for it and I kind of like covet it. When people drop their bullshit and say, you know what, I don't have to like that guy, Michael, but this is a real hard argument to make anymore. Like this shit is rigged. And it's for them to agree with that, if they have a service, if they have a community, they don't have the skin to stand against everybody and say, it's okay if you don't believe it. I do. I'm out here all the time saying this is what it should or shouldn't do. And it's not based on other things. So when I hear someone say that, I absolutely see it now. Isn't it liberating that, now that you said it, people heard you say it, that's not worshiping me. It has nothing to do with me. What are you saying? You subscribe to the idea that these markets are efficiently driven. So that means that's advantageous. Unless they intervene manually, we have the greatest advantage because we're not looking at horse shit. How do you look at because of somebody's buying and selling at an old price level? That doesn't mean shit about the next price run. It means nothing. You're forming a religion on something. But when we start looking at levels that are not hiding from you, they're right there. Everybody else can see it. This stuff has been out there all the time in front of you until you get taken to it and your nose is placed right here. Now watch. See what this is doing? Watch what it does. Watch these characteristics. See these things repeat. When this stuff happens, the scales fall off your eyes and you're like, oh, wow. Now, if this is true, this isn't complication. This is simplification through the lens of efficiency and consistency. Because if there is an algorithm, and once you come to this conclusion, if there is an algorithm, and if price is delivered algorithmically and autonomously, that means you're not going to ever run out of opportunities.
Right. I mean, essentially, it's a timeline. We're scaling through the lens of, uh, uh, I mean, think about it. Like, if I was an algorithm, me personally, if I was a coded system in a computer, I would essentially have to deduce down to like what is the true essence of bearish. That would be below the mean threshold or consequent encroachment in let's call it an imbalance of buyers and sellers that people want to acknowledge. And right, so we have, why would price have a body close above 75% and then, you know dump down? I mean, yes, it happens, right? But like, I just try to deduce it down to the simple fact of like, it's kind of binary, right?
Precisely. That's exactly what it is. It's all binary. Period. End of story. Until they intervene manually and they distort something. They do it advantageously. And usually when
Right.
it happens, just wait a little bit of time and then everything comes right back in the sync. And when you start watching the PDA raise, support price and order flow, then it's over. The intervention's done.
Yeah. Something I have noticed in these present markets is a lot of that, manual intervention. And I mean, like you were saying, it's we're times of war, borderline unprecedented times to even trade. And I could tell you without a doubt that the market I entered in 2023, 24 was a lot smoother of a market in terms of a larger respect on PDA raise, because I think we were essentially delivering on a higher time
I,
frame. We're